It appears that investors are becoming more active in markets across Australia based on the latest lending figures from the Australian Bureau of Statistics. New lending to investors is certainly on the rise with a 6.2% increase in May 2023. Lending to owner-occupiers saw a more modest increase during the month of 4%. This indicates that investor buyers are becoming increasingly active in the market despite those 12 interest rate rises since May last year, providing further evidence that economists are wrong when they assume that interest rate trends determine everything in real estate. These new loan commitments have brought lending volumes to a level that is 45% above the recent low of mid-2020, back when interest rates were at record lows. The recent increases in investor borrowing in March this year as well as in May suggest that property seekers are willing to enter the market despite the higher lending rates because they recognise there is massive demand for the scarce commodity of homes available for rent. This may help to explain why there's been a small increase recently in national vacancy rates, although they do need to be considerably higher still to restore balance to the rental market and to stop rents from rising. First home buyers are also starting to return to the market with 1.4 billion in loans written in May, which is a 5.5% increase month on month, but still well below the peak of early 2021. Now, if you go back to December 2020, new commitments for first home buyers accounted for 25% of all loan approvals, which was higher than the market share for investors. And in mid-2021, first home buyers were still above investors in terms of the share of new loans, thanks to the popularity of the Home Builder Grant. However, once the grant period ended, there was a significant drop in first home buyer loans. Significant price rises at that time also no doubt caused a reduction in first home buyer loan commitments. So now the market share of investors is starting to rise again, and the property market desperately needs investors to be more active to provide more supply of rental properties. It's clear that both investors and other owner-occupiers continued to borrow throughout 2021 when markets were at their hottest, but that slowed down in the latter part of that year and in early 2022, well ahead of the first interest rate rise. Overall, the increase in new loan commitments in May of this year indicates that property buyers are increasingly active in the market despite the high lending rates. This is evident also from the price data, which shows prices have been rising in most jurisdictions across Australia since the start of this year and are continuing to rise. It provides further evidence that interest rate levels are not the major driver of activity or prices in real estate, contrary to the theories beloved by economists. It also shows that smart investors see opportunities in this market where others see problems.